Hello guys, in this video I'm going to break down 10 analytical metrics that are must-have for every software as a service or technology business that there is. By now we work with quite multiple software as a service businesses or in organizations by implementing them BI, custom analytical solutions, dashboards, and just transforming their raw data into actionable insights so they're able to spot bottlenecks, pitfalls, and actually grow and use data in more efficient manner, right? And in this video, I'm going to break down 10 must-have that pretty much every single company that we work with, engage with, either already tracked it or we implemented for them, and that yielded a very high ROI for them in terms of visibility inside of their business, in either that be in the executive level, manager level. It doesn't really matter, but it helped them to spot bottlenecks and of course make data-driven decisions, right? And that's why they're must-have, because we haven't seen pretty much no single business not tracking them or not gaining insight or value from them, right, when we implemented these 10 metrics and features, right? Now, why you should listen to me? Well, we here at the Stella, we drove way over 10 million in pure cash collected just by transforming the raw data into their actionable insights for organizations by implementing data analytics solutions, dashboards, predicting, etc., etc. Basically, just trying to bridge the gap between data and business, as this is the biggest bottleneck, and of course, deploying the infrastructure that's scalable to sustain that in a longer term period, right? And of course, we work with multiple industry solutions, and segments of the market. And my goal currently is just to help even more businesses to utilize data to its fullest so they're able to scale, right? Now, here are some of the examples that, of course, some of the custom analytical solutions that we built in the past that we built and are, let me just open this like this. Some of them, you can even look some of the previous videos. Some of them I go in much more depth and break it down. Here is one of the solutions drove over 4 million right now, way over 10 million, just by gaining them insights from the data and how we know that or how we attribute that, because we literally started from zero. We literally started from zero. They haven't been tracking. They were around, I don't know, 100K a month in revenue, even less, I think. And we started tracking data, we started implementing the infrastructure, and they were able to scale way over 10 million pure cash collected. Now, let's go into it. Now, ARR, MRR modeling. Now, this is pretty much, let me just remove the focus so it doesn't get very too complicated. This is pretty much very straightforward, right? Basically, ARR is the total of recurring revenue from a subscription or contract over 12 months period, right? This is basically, it excludes any of the one-time fees, one-time payments, any bonuses that are a lot of them, any type of implementations, fees that are there as well. Basically just straight recurring, right? And this helps you to determine business growth, financial performance, and of course customer retention, right? It basically tells you how much is the predictability you're able to forecast your revenue finally, because you have a predictable variable. You have your growth insights, are you expanding, and so on. Your strategic decisions you're able to make and see where your revenue is actually coming from. Either that's be from upsells, where you're currently losing revenue, from what are people downselling, are they churning, how much of this revenue is actually new, right? This is very key things to determine half of the organization, just for the CEO and of course CFO and other executives, but also for the board members, okay, investors. Anytime you're gonna meet with the investor or VC or private equity fund and so on, right? They're gonna ask you these questions, and if you don't have these questions on your dashboard, on your report, and so on, then they're not gonna give you your seat A, B, C, D, whatever it is round that you're currently looking for, and they're not going to be coming on board, right? And this is, of course, even after you get them on board, you still need to track this, because this is what people care the most at the top level, like CEOs, founders, executives, investors, and so on. And the components of it, let's say you have new ARR, basically new ARR from the new customers, expansion ARR, basically cross sells, upsells, upgrades from the bigger plans, churned, okay, how many of them actually stopped you paying. Actually, here also could be included things like subscription pauses, which is not common a lot, but we work with some of the companies that actually have their subscription paused, and this could be a very big thing, because yeah, they didn't churn, but it's still most likely that they actually stop you paying. They just pause the subscription, right? And it's very good to see what are the periods that this churn or post actually spikes up. Either that be summer, which is quite often, or December, etc., and so on. And of course, the ARR and total ARR. Now, here's an example how this looks like from one of our dashboards. You're able to see the line is in total revenue, like ARR. You have the new ARR, basically the like the greenish in the middle. You have the expansion one. These are the upsells, right? The new ARR, of course, are the unique customers, just so you know. And churn, okay, the ones that are actually stopped paying you. You're able to see how much value you are actually losing, okay, how much revenue you are actually losing. And contraction, basically people who either downgraded to post and so on, right? And this is amazing to see because you're able to basically get all of the key things of your health, okay, we can call it all of the key variables to determine the health of the organizations in literally one visual, right? You don't need anything else. You're able to see here your revenue, your new ARR, expansion, churn, contraction. It tells you everything, and you can actually see here, okay, if your goal, like your goals are, okay, this quarter or this year even, we need to, basically our model is to get as many upsells. Basically, this is the majority of the new software tech company strategy. Basically, let's get them at the lower plans and then try to upsell them on a bigger enterprise plan, right? And of course, you're able to see here because your money is going to be made on the expansion revenue, right? Not on the super free trials or so on, right? Now, customer acquisitions, right? Of course, now see, this is sometimes very hard to track for some people or some companies. I think this is very hard to track, or you're tracking sometimes of spreadsheets and it's still inaccurate. Why? Because they haven't defined what cost of an acquisition actually means. They don't know what it's included in. Is it either marketing costs, marketing team costs? Is it just paid costs from the paid advertisement? What it is, right? You need to actually determine here what is cost of an acquisition, right? You can have multiple definitions for cost of an acquisition. Let's say if your CFO wants to try to calculate this in a different manner, or your CEO wants to calculate this in a different manner, that's totally fine. Okay, you can just have two same metric but name it a little differently. But at the end of the day, you need to have one North Star cost of an acquisition metric that everyone in the team, whenever you are on the founders meeting, on your board meetings, you're able to tell and see and align, okay, this is the cost acquisition that everybody talks about, right? And basically, of course, I'm not going to go too much in deep why this is important. Basically, investors targeting, you're able to see, are you actually profitable at all? Measures profitability, optimize marketing and sales strategies. Basically, this is very key when if you're running your paid advertisement, especially in specific segments of the market, either that's be enterprise, and you actually need to know how much are you spending now. And how this looks like, it looks like something like this. This is majority of times segmented by either subscription, okay, offers. What type of offers do you have? Either it be pro version plan, whatever it is, really doesn't matter. But your product types, your channels, marketing channels, as you can see here, email marketing, direct sale, organic search, paid search, social media, you're able to automatically see average and so on. Or here, by the specific segment of the market, mid-market, enterprise, SMB. This could be also for product type, as I said at the beginning. You're able to automatically see, okay, in the May, okay, mid-market is this, and of course, how you can even make it richer. This visualization is to provide you with the average, and of course, provide you with the targets. In this, you're able to have like a goals. Okay, our goal is to have our, I don't know, enterprise segment at least at, I don't know, below 5K, which is around that on average, right, for majority of B2B SaaS companies. Of course, it can be even larger. It doesn't really matter. It really depends on your custom goals and needs, and of course your LTV at the end of the day, and of course what your CAC payback as well, which a lot of investors care about the most in these specific market conditions. Custom lifetime value, you're able to see how much you're actually making money from each customer. This is very important to allocate your money, and of course allocate your budget in terms of marketing and sales, in terms of seeing if you're even profitable, in terms of you seeing what type of customer segments you should focus the most on. Because just because somebody's staying the most on certain lower plans, that doesn't mean you should focus on them, because they're going to be probably bringing you less than 10% of the revenue that the big boys, okay, the big accounts that you're having, pay you the most, right? So you're able to pinpoint and very carefully see who is paying you and who you should focus on the most, right? How is this calculated? Of course, time span. You need to know the time span, and of course you need to also know the gross margins, and of course overall the revenue of your of your specific customer. And here you're able to see it in this visual. You have your average, you have it segmented by monthly in this specific case, and you're able to see, of course, by customer type. You're able to see it segmented however you would like. Now, CAC payback period. Now, this is we implement it quite often because people love it, and it's probably one of the key metrics right now, especially if you're very high ticket. If you're very high ticket, even if you're not, to be honest, you need to know when your CAC is going to get payback. And basically, this will any investor will like to know this. It will tell you, basically determines the efficiency of overall the company, right? Because the CAC payback right now is getting increased even more and even more. And it will determine you how much you can price your products, how much you can spend and allocate on your marketing and sales, and what ROI you're actually driving, right? And here's how it looks like. You have your payback period in the months 19, 31, 35, and so on. You're able to determine really what's your payback. Is it increasing, decreasing? And of course, knowing it by a specific customer type, either that be segment, product type of offering you have, and so on, right? And of course, components that you can also have in the CAC payback is, let's say, you can also drive here in this visual. We could add the average CAC, okay, CAC per the customer, and of course even LTV, how much they're actually paying you per month to fulfill that full CAC payback, right? And things like that. Now, funnel drop off. Basically, you're able to see here. This is mostly for marketing and sales, but this can be applicable basically for everything. But you're able to see where the pitfalls and bottlenecks happen in the sales process and marketing process, right? You're able to pinpoint, okay, this is the bottleneck in the sales process. We need to increase this, decrease that, and it will automatically make your sales department way more efficient, and you don't need to spend time hiring and firing your reps and just underperforming all the time, right? And how this looks like, you're able to see, of course, let's say this has to be very aligned with marketing. And basically every single department has to be aligned to the North Star goal, and data helps you with that. And you're able to see, let's say, MQLs to SQLs, SQLs to SQOs. Okay, how many of them actually showed them on the call, how many of them actually no showed, how many of them actually were qualified, how many of them actually closed, how many of them actually after they closed were on board and actually maybe even upsold, and etc. Right? You're able to see the full funnel off of it. How this looks like, you're able to see, let's say, book calls, qualified, okay, from 1850, only 1K people were qualified, meaning around 55%. And here able to see qualified and, let's say, close one. And here it will help you a lot in terms of sales department, email marketing, to see the pitfalls, so you're able to not just spend money and burn money, but actually be more efficient with data. Funnel attribution. Now, biggest thing in marketing right now is not aligning this with revenue. I cannot aligning marketing with no revenue. Why? Because people are actually not having data and not able to see what actually is working and not what they're not able to optimize marketing spend and see where to allocate money, and they're not even seeing and aligning it to revenue, like North Star goals with sales and other departments of the company to actually be revenue generating department, and not just like we're going to give you leads, which is like quite irrelevant for anybody in the company. We don't really want leads. We want high qualified leads, so sales can close them, right? And of course, consistently, not just a bunch of leads 1 month and the second month is just zero. Now, and why you're able to and how you're able to do that, of course, you need to know your attribution. You need to know what is actually moving and actually working, and what's actually driving high qualified leads, like a high qualified pipeline that sales can close at the highest close manner, right? And you're able only to know this by seeing the full funnel, meaning you're able to see, let's say in this case, by having all of your data sources in the data warehouse, like your data sources connected to the data warehouse, that all the data is gathered. You're able to see things like your buyer journey, basically in short lines. Let's say in this name, John C, he clicked on your ad. He went then on your GA4 account, he's able to see, he visits your website, he scheduled a call, he then saw your ad again on the Meta platform, like Facebook, he downloaded a lead magnet, and he, let's say, closed one, and he actually paid at the end of the day. And you're able to automatically see this basically whole journey. Of course, it's not linear, and of course you're able to automatically see and determine your custom attribution, whatever attribution you want to use, and not just rely on off-the-shelf attribution and attribution you don't really even know that's actually working or not, right? And I'm not just talking here about attribution, but also I'm talking here about just gaining you the visibility of everything, of your MQL cost, SQL cost per lead, marketing budget, efficiency, and so on, right? Onboarding drop-off rate, right now this is a very product usage metric. You're able to see, and by reducing your drop-off rate in the onboarding or any type of product usage, feature usage metric, you're able to get them to the faster value, aka the aha moment, aka where they actually get the value from your product. And if they don't complete the onboarding, aka they drop off from the onboarding, you can expect high churn rates in the first 3 months, right? And how to do that, you need to track things like, in this specific case, you're able to track each metric, okay, each step in the onboarding of your product. Let's say, for example, logged in with your watch, opened the masterclass guide, and enabled free features. You're able to automatically track that. And of course, you're able to determine pitfalls, see when you need to fix, why is it happening, and of course how you do that, you're by enabling to what's called segment or to be able to track actually your product usage metrics, okay, event data, what we call here. Product feature usage, same things as I said right before, just for basically to determine what feature is actually used and actually the mostly used and adopted. You're able to here see what feature are they actually using and which feature are actually irrelevant, which you might think that they care the most about, but that might not be the case. As you can see here, exposed, activated, used, and used again. Okay, exposed is actually they are able to find the metric on their site. Activated, they enabled the metric, okay, they either clicked on it or whatever it is. They use the metric. You need to, of course, determine here the clear definitions for each stage. And of course, used again, okay, they're actively using this metric more than once. And you're able to see the whole funnel like this. Cohort analysis, you're able to see, let's say, if the customers are subscribing for a specific date. Let's say in this case, subscription started on April 24 of the subscriptions, new customers started. How many of them actually stayed? Let's say in the first month, 88% of them actually stayed. That means that 12% of them actually churned. And if we see in the second month, 79% of them actually churned already. That means quite more than 30% of the total customers subscriptions at the start, they churned already, which means that there is very high likely that your onboarding is very bad, right? Meaning that if they haven't found the value in the first 2 months, right? And of course, you're able to pinpoint where the churn happens. Either is it at the start, middle, at the end, and so on. Retention rate, you're able to see after they receive the value of your product, and this is mostly used in that specific case. You're able to see, are they actually staying? Is that problem really big to solve? Is it just like nice to have? And just basically see all your retention. Is it decreasing, increasing, and so on, right? It's pretty much very straightforward to do. I'm not going to go too deep into it, but that's basically for this video. If you want to build custom analytical dashboard solutions and actually turn your raw data into actionable insights to drive growth, you can book call with our exploration team, and we'll be glad to help you. See you soon in the next video.